what I could buy with that money. Now it's down $200. Up again! Down again.
The term binary options may not be as common as Forex or crypto, but that doesn't mean it's of any less use. Binary options are sort of an all-or-nothing trading mechanism. They are short-term trades with limited risk. The fun, and also the scary part, is that you either win all the profit or you lose what you opened the trade with. Confusing? Let's go over binary options once more and dive a little deeper to understand it fully. The simplest way to describe binary options is that it is a mode of trading that gives you only two options: you either get the profit or you don't get anything at all. One of the plus points of this all-or-nothing trade is that you would know exactly how much money or investments you will lose the moment you decide to open a trade. Now, why is that, you might ask? You predetermine an amount of profit which can either be in your favor, or you could end up losing that too. In this way, you will always know how much you will gain or lose. The phenomenon of binary options is pretty straightforward, and is actually one of the easiest to work with. When traders think an asset is behaving in a bullish way, they will buy a binary option. A bearish market will cause them to sell as the price drops. This is called the call and put respectively. Traders place their trading orders on a simple yes or no speculation. I should call it expertise judgment instead. Traders decide to make a binary options contract on pure judgment of whether they believe the market is going to be above a certain price at a certain point in time. You need to know that binary options do not give you an asset, you are not the owner of the asset you trade. The binary options contract has three pivotal elements. These are the market you choose to trade, which is called the underlying market. An example is Nadex, which is a US regulated exchange that offers Forex, stock indices as well as commodities and events. The strike price is the other element, which is essentially the price level. The strike price is what the binary contract is based on. A trader decides to join a contract depending on this very price and if they think the market is above or below this number. The expiration date and time are the third important element. Binary option contracts have an expiration date of about a week, and a time period of only 5 minutes. Binary option contracts are also available day and night. Some platforms let you know which contracts are available to indulge in, making your trading much easier for you. Binary option contracts can be made with 4 types of markets. Pretty diverse, I would say. These are Forex, stocks, commodities, and crypto. Hope you are grasping everything we have been over so far. Let me tell you that the simplicity of binary options has attracted innumerable traders worldwide, people who trade with other assets, and also those who have never set foot in a financial market before are now entering it due to the appealing nature of binary options.
Man, you'll get
It's not that simple, is it?
Heard it one too many times already. Rightfully so, I would say. But you must know that when I say simple, it is in comparison to other types of trades. You still need to know binary options inside out, how it works, what are the advantages of this type of trading, what could be the possible disadvantages. You must also know which companies provide binary options, and that too whether they are available in the country you reside in. The reason for this is because binary options work differently inside and outside the US. The details of how it works outside US are irrelevant right now. How it works generally is what is important. This is exactly what we will now talk about. We know that binary options have an expiration date and time. In order for the trader to make a profit, the price of the asset in question should be on the correct side of the strike price. Go back to see what that is if you do not remember. Did you know that binary options are automatically carried out in the sense that any gains or losses are added or subtracted to the user's account? Once the expiry is reached, the trader will either receive a profit or lose the investment. I am sure you know by now that there is no middle point. You cannot gain a little bit or lose a little bit. You cannot receive 30% of the profit, for example. You will always either lose the entire investment, or make a profit of the same amount. This is also the most distinguishing factor of binary options, compared to forex trading, for instance. You also know that this gain or loss depends on speculation and decisions that traders make. But what kind of decisions are they? Let's take a hypothetical situation. We have an asset X, which costs $20. A binary options trader will speculate that this price of X will either rise or not on July 16, 2022 at 11 a.m. This is a yes or no decision, like all binary option contracts. Yes, it will rise above the strike price of $20. No, it will not rise but will instead be lower than the strike price of $20. The bid and ask prices are determined by the trader themselves. If you, as a trader, believes that the price will be above $20 on the 16th of July at 11 a.m. and are willing to give $100 for the trade. If X turns out to have shares over $20 at the designated date and time, you will receive something called a payout as agreed in the binary options contract. This payout is predetermined. For example, 75% would mean you will get $70. In the case where the price trades below $20 at the date and time that was set, you would have chosen the wrong option and will end up losing the $100 investment. Oh, and each binary option has value of $100. This means that the value of the bid and ask prices will always range between $0 and $100. $0 if you lost, and between $0 and $100 if you were correct. Moving on, binary options trading is against other traders, not other binary option brokers. Novice traders confuse this and think they are trading against binary options brokers. The other traders also place their bids through their own speculation. Basically, what you gain, others lose. Similarly, what you lose, someone else would have gained. Lastly, let's quickly go over some strategies that come in handy when trading binary options. I won't bore you with too much detail. Just the interesting parts. The first is the most basic one, which is, follow the trends. Keep a track of the assets and their prices. The trends will not be one straight line. In reality, it will be quite a zigzag line. So be wary of upward and downward changes. Technical analysis is of great use here. Next is keeping a track of news trends. News events can completely change trends, moving the prices up and or down drastically and unexpectedly. Keep an eye out for such events. The hedging strategy, also called pairing, allows the placement of a call and a put at the same time. The trader takes the smart way and minimizes his or her losses by playing both sides. The 60-second strategy cuts the expiry time to only 1 minute. It is a surprisingly popular strategy. But this makes sense as one can use technical indicators and make their decisions and receive potential consequent gains in a much shorter time. The technical indicators mostly used here are support and resistance levels. Similar to this is the 5-minute strategy, which has an expiry of 5 minutes, of course. Other strategies include straddle strategy for extremely volatile markets, and Pinocchio strategy. There you have it. That was a complete overview of binary options, how they work and what strategies are commonly used. I hope you enjoyed and also picked up on the basics in case you want to jump into binary options. You can learn all about the binary options on our website.